Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is November 10th, 2025, and we are taking a close look at one of the most watched stocks in the world, Apple, ticker symbol Apple. There has been a flurry of significant news recently, so first, let's cover the fundamental landscape before we dive into the charts. Apple recently reported a blockbuster fiscal fourth quarter for 2025, beating analyst estimates with revenue of $102.5 billion and earnings per share of $1.85. This strong performance was fueled by record-breaking iPhone and services revenue, showcasing continued strength in its core businesses. Looking ahead, the company provided very bullish guidance for the upcoming holiday quarter, projecting a revenue increase of 10 to 12% year-over-year. This would mark Apple's first double-digit growth since 2022 and would be, in their words, their best quarter ever. Wall Street has responded with overwhelming positivity. JP Morgan hiked its price target to $305, its second increase in a week, citing strong iPhone 17 demand and robust guidance. Not to be outdone, Bank of America reiterated its buy rating and raised its price target to an impressive $320, pointing to long-term AI potential. However, it's not all positive news. Despite the record results, sales in the Greater China region declined by 4%, a point of concern for some investors, although CEO Tim Cook expects a return to growth there next quarter. Furthermore, some analysts, as highlighted by Yahoo Finance, still consider the stock expensive based on its valuation metrics. There are also whispers of renewed attention on Berkshire Hathaway's massive Apple position, with some speculation about potential selling pressure. This mix of powerful bullish fundamentals and underlying bearish concerns creates a fascinating setup as we turn to the charts. Now, looking at the daily chart for Apple, we can see the broader story of the past year. There was a significant and sharp sell-off in early April 2025, which news reports have linked to trade war uncertainty. The price bottomed out around the $170 level before beginning a powerful and sustained recovery. This uptrend has been remarkable, taking the stock from those lows all the way up to a new 52-week high just last month. The most dramatic recent move came right after the earnings announcement on October 30th. You can see this large green candle and a gap up on October 31st, where the stock surged to its all-time high of $277.32. This price action is a direct reflection of the market's positive reaction to the earnings beat and strong future guidance. Since hitting that peak, the price has pulled back slightly and entered a period of consolidation. Let's identify the critical levels on this daily time frame. The immediate resistance is, without a doubt, the all-time high at $277.32. A convincing break above this level on strong volume would signal a continuation of the primary uptrend and open the door to higher prices. On the support side, the first key area is the bottom of this recent consolidation, right around the $267 to $268 zone. If we lose that level, the next major support area to watch is the zone between $255 and $260. This area acted as resistance and a consolidation zone back in September and should now provide a solid floor. Below that, the prior highs from late 2024 and the low from early October 2025 create another significant support cluster around the $240 to $244 range. Let's zoom in on the daily chart to get a clearer picture of the action since late September. We can see the steady climb from the $255 level leading up to the earnings report, showing bullish anticipation in the market. The post-earnings gap up is very clear here, a powerful statement from the bulls. However, the immediate failure to hold gains above $277 and the subsequent pullback suggests some profit-taking occurred at the new highs. For the past week, the price has been trading in a relatively tight range, contained mostly between $267 and $272. This coiling price action often precedes a significant move, as buyers and sellers battle for control. The decrease in daily volume during this consolidation period further supports the idea that energy is building for the next leg up or down. Now let's switch to the 1-hour chart to analyze this recent consolidation in more detail. Here, the trading range since the start of November becomes much clearer. We can draw a distinct line of resistance around the $272 to $273 level, which has been tested and rejected multiple times. Similarly, the support at the $267 level is very well defined, holding strong during several tests last week. This pattern is what traders call a rectangle or a consolidation channel. A breakout from this channel will likely dictate the short-term direction of the stock. A move above $273 on the hourly chart would be a short-term buy signal for many traders, targeting the all-time high. Conversely, a break below $267 would be a short-term sell signal, targeting the next support zone around $260. The price is currently hovering in the middle of this range, indicating a state of equilibrium and indecision. To get an even more granular view, let's drill down to the 15-minute chart, which shows the price action over the last few trading sessions. This chart confirms the choppy, range-bound nature of the market right now. We can see small, indecisive moves with no clear directional momentum. The price action on November 7th shows a clear test of the lower boundary of our range near $267, followed by a bounce. Today's session has been similarly contained, oscillating within a narrow band. For intraday traders, these tight ranges can be challenging. The best strategy in such conditions is often to wait for a confirmed breakout on higher volume from the established hourly range before committing to a trade. Any attempt to trade inside this chop carries a higher risk of being stopped out by random price fluctuations. So, to bring everything together, let's recap the situation and look at the likely scenarios. Your key resistance level to watch is the all-time high at $277.32. Your key short-term support is at $267, with more significant support zones at $255 to $260 and then $240 to $244. The bullish case is strong, backed by outstanding earnings, positive guidance for a record holiday quarter, and a wave of analyst price target upgrades pointing towards $300 and beyond. For the bullish scenario to play out, we need to see the price break decisively above the current consolidation range, specifically above $273, and then challenge the all-time high at $277.32. A successful breakout would reinforce the bull trend, and I would place a 65% probability on this happening in the coming weeks, assuming the broader market remains stable. The bearish case hinges on the stock's high valuation, the pullback in China, and the potential for a broader market correction or significant profit-taking after the huge run-up. The first warning sign for bears would be a sustained break below the $267 support level. That would open the door for a drop to the major support at $255. Given the powerful fundamental tailwinds, I see this as the less likely short-term outcome, with perhaps a 35% probability, but it's a crucial scenario to be prepared for. Keep a close eye on any news related to the iPhone supply chain, AI developments, and the overall health of the consumer. The market is currently in a state of indecision, so waiting for a confirmed breakout from the $267 to $273 range is the most prudent approach. That's all the analysis I have for Apple today. I hope you found this breakdown helpful in understanding the current market dynamics. Thank you for watching Explain the Charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. You should always conduct your own research and consult with a professional financial advisor before making any investment decisions. Trading stocks involves risk, and you should never risk more than you are willing to lose.